Yes, we are.
All right, let me go back to Riverside. Take them headphones off. All right, guys. Welcome to VA Money Matters with Ty. I'm your host Ty, and I'm a life insurance professional, and I'm also a financial coach on the way to becoming a accredited financial counselor. And tonight we have the pleasure of having a financial strategist when it comes to life insurance and trust. All right. And this is Mr. Raymond Lives. I mean, I messed that up. My bad. Raymond Lives Patel. How you doing, man?
It's fine, sir. Don't worry about this. These are just names that you know. I,
No, I messed that up. I apologize.
it's okay.
Going first.
I don't like to be referred to by my government name, but it's okay. We gotta do what we gotta do. Soon,
Oh, you don't like to put your whole one out there?
it's
Okay. So what do you like to go by?
I just like to go by Raymond Lives because right now that's gonna be branded. You know what I mean? So
Okay.
that's how.
Okay. I gave him the government. But again, Raymond is a life insurance expert, and he is an expert in his field, and he is very seasoned. So seasoned that he has a whole slew of clients that he racked up last year, and people really trust him for his expertise. So before we get into it, I'd like to say if you have any questions as it pertains to life insurance or again, Mr. Raymond's expertise, which is the life insurance and trust. Like I said, that is something that I'm itching to hear from too. If you have any questions about anything you hear, please drop them in the chat. And you also find Mr. Raymond's link to get his services. So make sure you check him out if you like what we are talking about. And let's get into it.
Yes, sir.
So to start off, again, tell us a little bit about yourself, Raymond.
Okay. Well, a little bit about myself because I can go on and on. Yeah, my name is Raymond Lives. Last name Pretlor, since you put it out there, and I've been privileged to have a financial firm called One Accord Financial Solutions that has been blessing people for over 7 years now, and I've added this as a platform to reach out to people that need to have that financial tool to create generational wealth. And so I'm just happy to be here. This is about purpose. And I also thank you for your podcast. Thank you, Father, that for all the the people that you've been touching on this platform because people need to be informed, and they need tools like this and people like yourself that have the heart to put this information out there. So I thank you for the opportunity. And hey, I'm here. So whatever you have, whatever questions you have, I want to answer because it's important that information gets to our people because for years and generations we were not privy to this information. And
Right,
now that's out the bag. And now we're able to take advantage. And it might be a little harder than other cultures to get this information spread,
right.
but they're going to get it eventually.
Right. And I appreciate that. And I appreciate you because, yes, I have the guts to put it out, but I really need experts. Experts, again, I like to feed off the people that have the knowledge. So I appreciate you coming up here to share your knowledge with us tonight.
My pleasure.
So you did touch on wealth. You were saying build wealth. Just can you break down how people can build wealth with life insurance and how people have been building wealth with life insurance?
Well, I would like to start with how people have misused life insurance
Mm,
and then twist it to
okay.
where we've been taught the wrong things, and so I want to dispel some things at first, if you don't mind. And
Yep. Go ahead.
one thing that was very popular in our culture was buy term and invest the rest.
Hmm.
That was very popular in our culture. That was what we were told. Our culture. Meanwhile, other cultures were using whole life policies to cause their families to generate wealth. And
Mm,
so a term is just one element to the
yeah.
whole pie, you know?
Hmm.
And it's if you're if anybody knows about making a pie, there's multiple ingredients that come into making that pie. Well,
Mm-hmm.
term is one of those ingredients to creating that generational wealth.
Okay.
And it should be used in a certain way and strategized in a certain way that it's benefiting with uh, um, the right person in front of you. Not only that, but also the right carrier. The carrier is the key to recognizing how to make the term work for you forever. It doesn't have
Okay.
to be a term, it's just started as a term, and that's the key. And so that's one thing that I want to dispel. Term is not the end all be all. There's
Mm-hmm.
more to it than just that. And if you stop at just a term and you want to put money in the stock exchange and you want to put money into some bonds, you're limiting your potential for growth the way the Rockefellers did, you know? And so I want to
Okay.
we highlight that because um, we're doing a major misjustice to our people and our family, which is the key thing to it, when we don't maximize the other tools that are in our repertoire as life insurance strategists.
Okay. Okay.
Yeah,
So you said how the Rockefellers did it.
yeah, yeah.
Okay. Can you elaborate on that? How the
Sure.
Rockefellers did it?
So there's this book called "What Would the Rockefellers Do," and it's a book that highlights their or opens the door to their experience and their ways of doing things from the beginning of major industries. I don't know if people know it, but the Rockefellers started the medical profession. Did you know that?
No, I didn't.
The Rockefellers started the schooling system that we have even to this day. Did you know that?
Mm-hmm. Mm-hmm. Yeah, I heard of that. Mm-hmm.
They even started the oil industry.
Oh yeah. Yep.
Yep. And they there's a famous quote that says that, they don't want us to be thinkers. They want us to kind of follow and get
Yeah.
to the point where we just take whatever we are fed and run with that. But meanwhile, they did their own thing, and now that that book kind of reveals that, it's an opportunity for us to really recognize how they got their wealth and what they did. And so when we recognize what they did and we take it into practice, we can do the same thing they did because the cat's out the bag.
Yeah.
It's like God is no respecter of person. Principles work when you work the principles. And so I'm excited to highlight that a little bit today because, yeah, what the Rockefellers would do would be put that money into a whole life policy, not
Mm-hmm.
just a trust. They will put it in a
Mm-hmm.
whole life policy and they will maximize the death benefit as high as possible, focusing on that because that's going to go into the trust. And when that death benefit is maximized and is put into the trust, you got to think about generational wealth. If you were to put $10, everybody in your household puts $10 into a bucket. If you have 10 people in the family, that's $100 that bucket earned one time. Let's say that's a month. That's just
Mm-hmm.
$10. Imagine $100 we'll put into a bucket for the family. That's $1,000 at one time. It's a powerful way to compound, everybody's wealth over time because it's only going to multiply. And so what they did was put it into the trust with a high
Right.
death benefit. And as people passed away, that death benefit became liquidized into the trust.
Mm.
And over time, those millions started stacking.
Yeah.
Grandma passed away, grandpa passed away, and as they passed away, not only is it having the compound interest of the cash value ballooning, but also the death benefits are adding to the bank account that trust is set up with, and
Mm.
that's what causes trust babies to be born into wealth.
Born into wealth. I feel you on that.
Yeah,
Okay. Okay. I'm understanding. And like I said, that was definitely a good concept right there. If you just keep adding to your family's trust, you really are building wealth for your family.
correct.
Okay, so that's why you would recommend your, like, if someone was to be looking for life insurance, look for something just a little more in term so you can build that wealth.
Correct.
Okay,
Correct.
Got you.
And it's not just for this generation.
Hmm.
Those trusts could be set up for 100 years. And so you're thinking about generations to come, and it has to be started somewhere. And so it might as
Yeah.
well be you. It might as well
Yeah.
be me because our grandparents didn't do it. My parents did. Did your parents do it?
No. No.
My
No.
grandfather did have a life insurance policy. He did that, and he left $4 million to his kids and his kids' kids. But that's the only black man I know that did that in my own life. I've seen it, of course, in other people, but that 4 million was in one life insurance policy. And imagine if it was in his father's, trust,
Yes.
and it would have matriculated into
That could be
wealth.
powerful.
Yeah.
That could be powerful. I said I said in one of my reels that oftentimes in my video, I said oftentimes, we as men, black men, or just men in general, we chase wealth. We chase wealth. We spend almost our whole life chasing wealth, chasing wealth. But oftentimes we don't think about what if we don't get it and we can just give wealth or hand down a portion of wealth for the next one, not to chase as hard, So that could be really a blessing to leave your family if you actually, use life insurance correctly. You could be the first, you could be the one that lays the foundation. Like I said, I could only imagine if we were trust babies and got left a crazy amount of money, or my parents. But most of my family that I've seen coming up, again, I'm 35, but most of it coming up, we don't own our houses. We're renting. We did. I mean, now we are a lot more knowledgeable. So right now we're doing better. But I know just coming up, not too many people own their own homes. And that's just a common thing in our culture, at least from my vision, what I've seen is a common thing. People wait till they're like about to start a family, get married and kids, and then they go into trying to buy that house. Then nothing, most of the time I haven't seen people get left things except outside our culture. I see it all the time.
Yep.
See it all the time outside our culture. Prime example, just a guy that I, was working with. His last name was the name of his street, right? So, like, we out there, at the time, I'm going for supervisor and I'm trying to show that I'm better, I'm trying to prove myself. And he's so nonchalant about it. I'm like, what's wrong with you? He's the same age as me. I'm like, he's like, man, I work when I want to work. Just his attitude kind of was different. I ain't saying do that if you're wealthy, because you still can work hard. But his attitude was different. And I would talk to him. I'm like, oh, because he don't have a mortgage like I have a mortgage. Oh, he's not worried about, where he's going to stay. He can just build off the land that his parents left him, because he lives on, like I said, his name was Brown. He lives on Mr. Brown's lane. I'm like, dang, okay, I see how some other cultures have it.
Yeah, they have a mindset. Their mindset has been twisted from lack to abundance.
Mm-hmm.
And they've gotten to the point where over time they heard vocabulary that we might not have heard.
Facts.
And as a result of their mindset shifting from not enough to more than enough, that abundance, started coming out of their mouths in different ways, and they started maybe getting cocky, and some people take advantage of that wealth and they think that they're better than others, and that's not cool.
Mm-hmm. Yeah.
And it does take discipline sometimes when you have it all and you're able to not think like everybody else thinks. And so, yeah, if anybody came up on some wealth, they're going to talk different. They're
Yeah.
going to carry themselves different. They're going to have a different walk, a different swag, a different confidence. And it does come with the territory. So you have to, even with that wealth, you have to have some meekness and learn how to be humble, and
Yeah.
everybody gets that lesson,
Yeah. So we saying this word wealth a lot. So I gotta ask, what is your definition of wealth? I
Okay.
know the textbook definition, as much money as you have to live and be able to sustain yourself, but what is your definition of wealth?
It's a form of prosperity that's not limited to money.
Okay.
That's how I define it. It's a form of prosperity that's not just limited to money because my health is also my wealth.
Facts.
You know, having a family that's healthy and growing with good communication is a form of wealth, a wealth of knowledge, a wealth of unity. And when you have that, that becomes a whole nother direction of what we think wealth is all about. You know, and so
Facts.
yeah, I think wealth is just another. It's a form of prosperity that's not limited to just money.
Got you. Yeah, yeah. I like how you put it because a lot of times people just think money, 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 money.
Yeah,
It's a lot of things that knowledge can be wealth.
yeah,
Having knowledge passed down, because again, the more you know, it is you can get ahead of the game with the more you know. So wealth comes in a lot of different forms. I just like to hear other people's perspective on what wealth is.
good question. Good question.
All right, so now I got to ask you some technical questions. So let's start with so what is your investment philosophy when it comes to life insurance? What is like if I'm a young man, right? I don't have kids and all of that. What and I have, of course, I have enough to get life insurance. What type of policy would you recommend? What type of investment strategy would you give to someone like that? I know life insurance has is different for everyone. Everyone has their own need, but we're talking about someone that young man. I don't really have a family, so a big life insurance policy might not be something I'm thinking about right now. But I want to try to build wealth. The wealth idea and the fact that I can build something off of that. What advice would you give that young man?
Well, I don't have to think too far. I have a client that I can speak about, and this client has a desire for that desire to build the wealth within his family. And his mother, another client of mine, started the family trust. Right.
Okay.
So this client, he wanted to get the highest death benefit possible.
Mm-hmm.
He also had some debt that he wanted to take care of. He has a good level of income, and
Okay.
so he's actually 30 or he's actually 40, and so he's at a good age, to start everything. That's it's not too late. You know what I mean? It's never too late
Mm.
to start. But I'll talk about him. And he has no kids as well, and he's living in Atlanta. All right. And one good thing about him is he's um, willing to trust me.
Mm.
And I say, I don't want you to put the trust in me. Put the trust in the principles that the policies are going to bring your family. So that's first thing. And then he
Gotcha.
also is able to consider the trust that his mother set up. And so knowing that it's going to be put into the trust, he's thinking, okay, I want to do a cash value. I want to
Mm-hmm.
clear some debt, and I want to set up my kids before they're even born. And so
I
the
like
first
that.
thing I set up for him was um, that term. Let's just talk about that. The term first.
Okay.
The term is very inexpensive.
Yeah.
It's
Yeah.
inexpensive so that way you can convert it into a whole life policy over time
Mm.
when you're ready.
Mm-hmm.
I'm going to purposefully speak on it in that manner. The
Okay.
term is just a temporary hold of the death benefit so that over that term you have time to convert it into a whole life policy.
Got you. Okay.
Right. So that's why it's important to be with the right carrier, not just the right agent, but the right carrier, because there are a lot of carriers out there, State Farm, Allstate. I don't even want to mention them that don't give you the full pie. They don't give you the full understanding. So they just might sell you a term, and you think that that's all there's to it, and they don't have the whole life
Mm.
connected to their offers. So you have to make sure that the term also has a whole life policy that's connected under the same carrier.
Okay.
You're going to want to convert that term into a whole life over that duration of time. And that's either 10 years, 15 years, 20 years, 30 years. I always like to give them a short term so that they have the biggest death benefit possible.
Okay.
Then, knowing that they're going to go into the trust, convert that into the whole life IUL. And that's the second policy I would highlight. That's like the Cadillac of,
Okay.
that's the one that has all the bells and whistles.
Yeah.
It gives
Fact.
you living benefits, and the living benefits are unlimited.
Mm-hmm.
And I can also highlight that this is also considered the infinite banking system because that's what makes it unlimited.
Yeah.
So I would highlight that the IUL has a bad rep, and I kind of started listening to why they're dogging the IULs simply because they say, well, if you pass away and you don't use your cash value, the carriers get the money back. Well, who do you know takes money and puts it into a bank and doesn't pull out that money that's in the bank?
Yeah.
People that don't use the money that's in the bank.
Yeah.
This is a form of a bank account that's on steroids because
Mm-hmm. Savings account on steroids.
yeah, it compounds every single year and it's never going to go down. That's what makes it no risk.
Yeah.
And
Yeah.
so this IUL has the capability of acting like a bank because it has a few different buckets in it. It has a living benefit bucket, meaning if anything critical, chronic, or terminal happens to you,
Mm-hmm.
anything in the hospital is paying that doctor bill. And did you know that the doctor bills or medical bills are the highest bills that cause people to go into bankruptcy?
Nah, I didn't know that.
That's interesting to hear how they know that their bills are going to be high. But guess who set up the medical bills? The Rockefellers.
Of course.
They set the whole system to function so that that industry makes money. And if you were to be a holistic doctor, someone that uses, you know, natural foods and organic foods as their medicine, you don't have the the power behind you because they're coming after you. They want to shut you down because you're going against the grain, and you're not even considered a medical doctor because you're not going down their clubs or method of medicine. And
Yeah.
they only know about 24 hours of nutrition by the time they graduate, if that. And so, yeah, uh, that's a whole nother conversation. But
Yeah. 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 I like it.
IULs are the second tool that I would use. Like I said, the living benefits that handle anything medical, but also there's a retirement piece to that because
Mm-hmm.
while you're putting your premium into the policy, you're growing wealth in that, like I said, that bucket that's compounding like a bank, more so with positive. Some people have the high yield savings. This is high yield savings on steroids because it's growing faster than those accounts, and
Gotcha.
so the average is between nine and 12. But it's also based on the S&P 500, and
Yeah.
that's the that's the protection piece. That's the indexing element, the IUL, indexing universal life insurance. The indexing portion is what's continually growing in time
Mm-hmm.
and being that bank element that you can borrow from while you're
Mm-hmm.
alive, tax free, and give you the experience that the Rockefellers had when they first started.
Mm-hmm.
They didn't borrow from the bank. They first borrowed from the life insurance policies at first. Over time, they could just borrow from the bank account. But that gives everybody that has a policy a pool of money to pull from while they're alive. And so this client that I'm referring to wanted to have a high death benefit, but he also wanted some cash value to grow. So he made sure that his premiums were feeding that policy to give him a certain amount of money at a certain amount of time. And so uh, the retirement piece is what I was also highlighting. I got off of that. After 59 and a half, because that's when you're deemed retired,
Uh-huh.
that's when you're able to pull from the money. And I like to call it, put it on its own form of an annuity type income where you can get checks from your life insurance policy every year and annually. You have set. I normally set them up annually to receive a certain check from that carrier every single year to fund their retirement years. You know, and of course, the sooner you get the policy, the more it'll grow and expand, turn those kids into millionaires. And so that's the second policy that he got. Now that growth at the retirement part of his life is very important because he's thinking, I'm not going to have the income that I had when I was younger, you know, and I'm thinking that I want to have some money to live with. I don't want to go back to work. You know, a lot of
Mm-hmm.
baby boomers had to go back to work because their retirements of the using 401ks ran out soon. You know, that's not really the baby boomers, but the generation before them or after.
Yeah,
You know, I'm getting a little confused by
you
that.
good.
But um, a lot of the seventies and 60-year-olds had to go back to work when they retired because their money ran out in their
Mm,
401ks.
mm.
If they had the pension, that was more beneficial, but they started doing away with those. And the reason why the company stopped the pensions was because they knew that the people getting older longer and living longer, and they're paying them the same check or 80% of their check for the rest of their life. And that was overextending them. And a lot of the companies were not making any money off that individual that retired. And they were going into bankruptcy because so many people were retiring and living longer that they had to stop that system. That's why the 401k was created. That's why they created that in 1978 to offset that that weight that the corporates had to handle and put
Hmm.
more of that money back into the Wall Street because due to the war, they stopped investing in the Wall Street. And so there was a whole major
So
issue.
they wanted to give people incentive to come back to Wall Street.
Correct.
So the incentive was, I match your money.
Yep, I match it.
Yeah, okay. I
And that's
got
the biggest lie. That just gives them rights to actually take that money in their back pocket and reinvest it somewhere else, make more money off of it, and not even share with you the growth that they get. You know what I mean? And that's
you.
that's
Yeah.
what that's what I don't like about the systems that are out there. And the Rockefellers knew that they were out there.
Hmm.
They were friends with
Hmm.
the people that set them up.
Yeah, yeah,
They
I
were
got you. You definitely going down. He dropped a whole lot of information right there. I liked it because you went through and you basically one of the things you were saying is one first part is you don't mind having multiple policies. I would do want to say that because you said you start the guy out with term and then you would get other policies. So that's something like first you might want to think of other policies because they do different things. One is for insuring. It's basic term. That's just try to max out your death benefit, but you can invest with that IUL and you can invest with that, and you even compared it to the 401k. You did a lot right there.
yeah.
So what do you think compared? I don't know. I'm gonna ask compared to the 401k and IUL.
Mhm.
What do you think? Which one is preferred to you? I give you mine. We're gonna start with there, and then you can do what you do from there. My vision is I do like the 401k, for example. That is if you're talking about net worth and stuff like that. Because of my 401k, been at my job a while. That is a big chunk because the matching, the putting in, and I do use the 401k, as, a retirement because that's purely what it is. I'm thinking about retirement with that account, So I'm a fan of 401k because I didn't have or see anything else until now. I see life insurance as an investment vehicle too. But I'm a fan of the 401k. You know, I wouldn't have been able to stack up as much if I stacked up if it wasn't for that 401k. Wouldn't be able to borrow to get if I want a car, go borrow from my 401k just like you would, do from life insurance, borrow it, pay it back. Is really a good investment for me, and I've seen it over years be very, very beneficial to me. So I am one that's pro 401k. It's kind of hard to turn me away from it just because I've seen it in person what it does for me. But how would you say? I know Markel broke it down a little bit too, like how it's taxes involved into it too. But how would you compare the two, and which one would you say is better for, investing purposes?
I'm glad you asked that question because I have no 401k.
Oh my. Well, are you an entrepreneur?
I had it. I had it. And I
Cause I
did.
get it. Entrepreneurs don't have one. If you get to go out there and
I
you're
had
on
jobs
your own.
before. No, I
Okay.
had jobs before, but as soon as I learned of the IULs,
Mm-hmm.
the light came on. And then as soon as I put two and two together of why the 401k was created, I was anti 401k.
Yeah, I
There's
got
another
you.
book. I got another book for you. It's
Okay.
called 401 Chaos by
Got
Andy Tanner.
Uh-huh.
Read it. Read
Okay.
it. Please read it. But I
401
want to go back to
chaos.
your situation, Ty, because Ty, you mentioned that you've had it for a while. You've gotten some benefits out of that 401k. But imagine, my dude, imagine that you didn't know about the 401k and you knew about the IUL when you first started with the 401k.
Mm-hmm.
I'm going to tell you the differences that you would have experienced over that time. You don't
Okay.
know if I do that, do you?
No, go ahead. Break it down.
When did you first get your 401k, if you don't mind me asking?
Probably at like 18. Like I've been at my job for a long time. So probably like when I eight, let's say six, maybe not right when I started. So maybe like 16, 17 years ago.
Remember what year that was? Roughly, this year
Oh,
25.
I started probably '09,
Okay, oh 09. Mm-hmm. Oh
somewhere
09.
around there.
Okay.
Hmm.
And that's when you started your 401k.
Yeah, around that time.
So around
Yeah.
that time, I was actually working at Freddie Mac. Freddie Mac
Hmm.
was a major mortgage lender for the government, right?
Okay.
And 2008 was a major hit on the market.
Yep.
Remember that era?
Hmm.
At that time, stocks went down and they were hurting. And 401ks were hurting as well.
Hmm.
And so you came right after that little depression moment. And imagine you started then. Okay, let's say you started an IUL at that time.
Hmm.
And how much were you contributing to that 401k at that time?
It was probably like a certain percentage of my check, probably like 3%, something small.
3%?
It was certain small. I can't remember the dollar amount because it's percentages
Yeah.
of your pay.
What's it about 200, $300 a month or paycheck? And then they were
Uh,
matching from what they said.
yeah, yeah. Let's just go with maybe 100, something like that.
Okay.
Yeah,
Let's say
maybe.
it's the average 150 a month, right?
Hmm.
And you contributed for, let's say, 10 years
Hmm.
in the IUL instead of that 401k. During that 10 years, did you make any um, deductions from that 401k?
The first 10 years, no, I don't. No, I didn't start taking from it till later. It was built up pretty decent, and yeah, I was able to get a car loan. Well, pay my car loan off that I had with the 401k. Pay
Mhm.
myself back from the 401 to my 401k. That situation. That's how it was really beneficial with me.
Okay.
Like I said,
And so when you took that amount out,
hmm,
was there a penalty fee?
no penalty fee. It was just I had to pay myself interest back.
Okay, that
So
interest.
it's like you get the loan, and then you got to pay it back at whatever rate it was. And the market was good at that time, so it was like 4%, something like that. Pay yourself back 4%.
Okay, so 4% of interest. Is that,
Hmm.
and then was there a tax hit on that deduction?
I don't think so.
I need you to look back, look at your taxes, and when your
Yeah, like I
CPA
said, I
or
can't remember.
if you recognize it, and the funds that came out of that account were taxed
Mm,
because it's a tax deferred bucket.
mm,
There's three buckets. There's the taxable, tax deferred, and tax free.
hmm.
401ks fall under the tax deferred, meaning it's deferring the tax hit until it's pulled out, especially when it's before 59 and a half.
Hmm.
That tax hit happened because you were younger than 59 and a half.
Hmm.
So there was a tax hit that you experienced when you pull that money out. You might not even recognize that.
Yeah, I honestly don't think. I just think it was a loan amount because the money is still there. So for example, my 401k, when I get a loan out, it's just like, I guess the benefits, like you said, with the IUL, is stay in the trust or whatever, and it's still there. So, for example, I have a dollar amount, but the true amount is the amount minus my the loan that I was paying back at the time. So it was two amounts. So I think it's still like the one I got. I guess I think it still ran my money in there like it's in there. I was borrowing their money because I still had that amount labeled as this is my amount. So
Okay. Well, if it was in the IUL, if it was in that account instead, there would have been no tax hit. It
mhm,
would have been just a transfer from the wealth of that bucket, that cash value bucket, and the balance or the value would not have gone down at all.
mm,
It would have been as if the money never left the account.
mm.
Think about
Okay.
that. So that means that the compound will continue at the rate that it was before you made the deduction. Now, if it was because it's like the 401k, that balance went down at that
Mm.
time, and that's a major difference right there. Life insurance, it wouldn't have moved, but when you made that deduction, the balance of the 401k was reflected based on that,
Mhm.
right? Not just that, but if there was a downward spiral
Yeah,
of
that
S&P
yeah,
500,
yeah.
like in 2020,
Mhm.
not only would it have been down based on what you borrowed, but because of the S&P 500 going down, it would have gone down with that.
Mhm.
The IUL would never have gone down. That's the protection right there. That right there is what I saw when I learned of the IUL, that I'm not having any more loss. So when the market goes up, it goes up with the market. But when the market goes down, it's freezing. That right there is asset protection 101.
Gotcha.
And so your wealth would have been at a higher number, a higher value at that time that you made that deduction. And over those course of the year, you would have seen more growth in the IO versus the 401k.
Gotcha. Gotcha. Okay.
But
Like I said, I
there's
definitely understand. I understand the logic behind it. Definitely understand the logic behind it. But again, like I said, so many times in our culture, we don't have other investments to even consider, right? So we just know the basic, whatever your job has, and we rarely. I know it wasn't until maybe 2020, people start really getting into investing, the stock market, things like that. They say it's because COVID hit, people sitting at home learning new things. But I know before that, it was learning other things to invest in. People don't talk about it. So I again, I'm going through the process of becoming an accredited financial counselor, and I'm going through courses, and
good.
it was one of the things in culture is just 80% of people don't talk about their funds with other people. That was a statistic. I was in a webinar today, matter of fact, and she was like, yeah, it's a statistic that 80% of people don't speak to other people about their finances. And what we do, life insurance agents, life insurance coaches, people that are advisors with money, we get the special opportunity to actually get involved with people. And sometimes you might be the only person that this person has talked to about money in years.
Yeah,
So
right.
that's just a culture that we have. I don't know if it's a good thing or bad thing. I think is you should have someone to talk to about it. I understand being tight-lipped about your money.
Right.
My father often says, don't speak about your money, don't tell people about your money. Is something behind that, and I can speak about it. My father, he lives in DC, and his growing up, his brother got killed and robbed because he was displaying, money. R.I.P. to my uncle, but he was displaying that he had came up, lottery ticket or something, and he was showing off, buying things and
Mm.
talking about money, and He ended up getting robbed and lost his life behind that. But those are the type of traumas that keep us as people, as a culture, stuck in the mindset of don't don't talk about your money. But that is the same reason we don't grow and gain wealth, because we don't talk about money. So I don't, like I said, that's a hard trauma just as a people, as a culture, to really work through.
Yeah.
Because, like I said, I could hear my father there. Don't be talking about your money. You need to stop shining. And I got it. I get it. And I understand why that is. But I don't really know how to fix that stigma. But
Point to
again,
other cultures. You said earlier. Point to other cultures.
yeah, look
Other
at what they're
other,
doing.
other ethnicities, they do talk about their stuff with their family,
Yeah,
and that's why they grow.
yeah,
Information sharing is so important for especially families, at least the family,
facts, facts,
because that gives that family people that they can bounce information off of and conversate. Oh, I did this, or I tried that, and they can begin to work as a unit and go higher together. There's
facts,
power in unity. As a matter of
facts,
fact, the word talks about it in the place of unity. There's a blessing.
facts.
That's Psalms 133. Like that's one of my basic foundational scriptures behind my business, One Accord Financial Solutions. There's a there's a blessing in unity, and
Mm-hmm.
so um, that's unfortunate that our culture. I think a lot of dated back to slavery. We weren't able to share information.
Yeah,
We haven't got the
trauma.
same habit that the other cultures have to
Yeah,
grow our wealth. And the word talks about, yeah, don't let your left hand know what the right hand is doing. And there's some wisdom to that because not everybody has your heart.
yeah,
Everybody
yeah.
desires the same thing for you.
Facts.
Yeah.
And that is exactly, like, trying to overcome that is exactly why I started my journey of content creating,
I love
trying
that.
to heal that stigma, because I started talking about the stock market on a whole nother channel. And I like that was my main focus, because again, it's one of those cases of I learned about something that I benefited from because I knew about it and I built wealth through it. But I learned about something. I think, again, I'm 35, and I really learned how to invest in the stock market at 30.
Mhm.
At 30. So I know it, what really made me mad, and I know we supposed to be talking about life insurance, but now we talking about
Listen,
wealth.
I'm gonna connect it to later on.
But what really made me mad was, again, I'm a supervisor at the time. I'm 30. I learned about the stock market. One of my employees comes up to me and said, "Oh yeah, you invested in that stock?" Mind you, he is, I think, 19. He said, "Yeah, I've been had a stock account. Look," and again, he opened with his money. I'm like, he's showing me the trades and things that he's been making. He's been investing. His dad had a stock account for him. So now he has these stocks too to play with, because he was left in a stock market account, or what is it called? Shoot. But the stock accounts that you get for the kids, he's given one of those, and when he turned 18, he had stocks and funds in his name, custodial account. Because I have a custodial account for both of my boys. Because of this, they definitely going to be much better off than I was. Because I was like, this is not going to happen again. My kids are not going to be not privy to this information that other families are. But again, it goes back to just in our culture, we're not taught things, but other cultures are
Right.
taught that stuff way earlier. This man, I'm 30, he's 18, 19, straight out of high school, and he already knows more about investing than I could possibly, because he was taught. So that is one of the things that I do want, just to be out there and put information out there for that person that was like me, going through life and not knowing. At least they can see either on YouTube, or you connect with someone that can really put you on the right path, or at least tell you something, spark you to research. That's my main thing. If I tell you something, I encourage anybody to look it up, go do your research. But I sparked it. So now you know something about something, and it's up to you to do the research and make it worth your while.
Yes, sir. And with that in mind, I want to spark something for you and your visit and your viewers because you're missing it all tonight, and
Mm-hmm.
I want to explain why I don't have a 401k.
Okay. Mm-hmm.
I don't trust the feds.
I got you. Okay.
Now let's go back. Let's go way back to 1912. Do you know what
Okay.
major occurrence happened in 1912?
Nah, you gotta enlighten me.
The dollar was born.
1912. Okay. Okay. Okay.
Yeah. It was born through the Federal Reserve, right? Did you
Mm-hmm.
did you know that?
Nah, I didn't.
Okay. Now, when you hear Federal Reserve, you would think that's a government entity,
Mm-hmm.
but it's not. The Federal Reserve is a company formed by major banks.
Mm-hmm.
At the time, Congress was forced to put some form of currency together for America. And before then, they were trading, they were garnering, gold and silver and all that, and they didn't have a paper form of money at the time. So they created the
Mm-hmm.
dollar to be the currency, the foundational currency of America. And it was actually a secret. It wasn't supposed to be public at the time until the feds rolled it out with the US Treasury, government entity, and they started printing dollars. But at that time, based, it was funded with the help of gold.
Mm-hmm.
And gold was the major value behind that dollar. But then in 1981, the president took that dollar off of the gold off of the dollar. And when he took the gold off the dollar, the value of that paper went down tremendously. That's why back then you can get coffee for 5 cents.
Mm-hmm.
The value of the dollar went down to now coffee is $5.
Mm-hmm.
The value of that dollar changed when the gold was removed. And when that happened, the feds started playing around with it because also at the time they already went through some wars, and the monies that were in the stock exchanges and the market, Wall Street, they were losing money because people started losing trust in the whole system, right? And so when I saw that they created the 401ks to put money back into Wall Street, I was like, well, why is Wall Street a major thing? Well, it's 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 the foundation for a lot of businesses' future growth. And that's why you have some businesses more powerful than countries. And so now a lot of the people that are going into office, and I don't want to get your thing shut down, but I'm telling some truth. Uh, the reason why they're in office is because of the large organizations and companies that are backing them up
Mm-hmm.
to push their agendas and not thinking about our culture, thinking about their pockets and their culture. And so one of the reasons why I got out of the 401k system is because I learned that, again, we're going into secrets, that the Wall Street was manipulated by another government that
Mm-hmm.
runs our government. So
Oh,
you talk about
you, yeah,
sparking some
yeah. You
research.
can, yeah. You just
It's called the shadow.
I'm the only one that asked the
No,
what
no,
government,
I understand.
which
It's called
country? Yeah, yeah, and then sparked it. Like, which one are you talking
the
about?
shadow government, my brother.
Yeah, I'm gonna have to. Yeah,
Start
definitely.
researching the shadow government and recognize what they are in control over. This system, we were born into America with a social security number
Facts.
into the United States of America, Inc. But you don't see the ink.
Mm-hmm.
We were born into a business, not a
Mm-hmm.
country.
Mm-hmm.
because our parents signed that social security number or birth certificate and gave us that put us into their system that they know about. So our names are associated with that. That's why it's important to go into the next level and not use your government name, but start
My
using
bad.
your LLC name,
Yeah.
right? Use
Yeah.
your LLC name as your new name that people pay you with, so that Raymond Pretlor looks dirt cheap to the IRS. Raymond Pretlor makes no more money anymore. He's broke because he doesn't get checks in his name anymore.
Mm.
But the LLC that he owns makes all the income with a different tax hit than the individual of Raymond Pretlor that the government owns. I own now the LLC that my income comes into, and Raymond Pretlor doesn't make that much money anymore.
Mm. I'm smiling because I everything you're talking about, I see it all the time. I see it all the time on social media. You know, you'll see these small snippet clips, and I recently was just that you can go down that rabbit hole, and I can start. What is he talking about? Now I got to go research this. What? But again, I don't know how valid that is because I mean, if that's the case, the main person that you're gonna find out whatever Google wants you to find out, right?
True,
So when you do that,
true.
how valid is anything you really see up there? So I definitely like everything you're talking about. That's why I'm over here smiling, kind of like, oh man, he dropping some jewels for real. But so I definitely agree that there is a lot that people need to go find out and research themselves about some of this stuff that again you're talking about because I already know. I already know. So speak since we're on the topic of businesses.
Yes, yes,
You are an entrepreneur, right?
correct.
So what advice would you give to someone that is looking to be an entrepreneur? You know, if they are, let's say they going in, clocking in somewhere, but they would like to be an entrepreneur, what advice would you give to them? Like some basic advice to someone that aspires to be an entrepreneur.
Read, study,
Okay. Okay.
change your mindset, because along with that transition into an entrepreneur, you have to start thinking differently.
Mm-hmm.
I could talk about the four quadrant. Can I talk about that real quick?
Yeah. Go ahead.
We were born into the mindset that we need to be an employee.
The schools and everything try to train us to be
To
that.
be an employee, correct? They
Mm-hmm.
set up colleges to make us think that that's the way to go. That's what you want to be. You want to be an employee. Why do they want you to do that? Because you're going to be taxed the highest as an employee. They want you to be there.
Mm-hmm.
And then once you're there, you can be like, I want to own a business though, because I want to own my job. Right? All right, well then be self-employed. That's the next quadrant. Be self-employed so that you can own the job, come in when you want to work, but you have to work to eat still.
Mm.
That's a mindset that they want to keep us on. I highlight to you to get to the next level, you have to start reading
Mm.
beyond here and understand what it takes to cause millions to come into your business. It's not going to be your labor as an employee. It's not going to be your labor as a self-employed person. You have to start becoming a business owner. That's over here.
Mm. Okay.
Now, this there's a line, an invisible line right here, right? This
Mm-hmm.
business owner is also a self-employed person, but he thinks differently. He thinks like the wealthy, which is, I'm going to use leverage to cause my business to run and function. I'm going
Mm.
to leverage other people, not just myself anymore. I don't want to be the only one working this business by myself anymore. I want to hire somebody to work and solve problems for me that's qualified. So I'm going to hire someone that just left college with the mindset of an employee.
Mm. Mm.
So I'm going to hire that person to run my business for me so I can go play golf.
Yeah. Yeah.
or I can
Okay.
do more things to build that business, and have more income generating opportunities, so that the operations are running on its own, and I'm able to get out of the picture and not have anything to do with operations while it's running.
Gotcha.
That's a
Gotcha.
mindset shift that has to happen
Has to
because of
happen.
systems.
Facts.
The only
Facts.
difference between McDonald's and Mary's Chef catering company is that McDonald's used that chef catering service to provide millions of meals in a day because of systems that McDonald's, I hate to use them as an example, but there's a movie that highlights that. They use systems to cause their wealth to multiply. And it's not
Mm,
the systems of hamburger making, it's
mm,
the systems of real estate,
mm-hmm, mm-hmm,
right? So
mm-hmm.
they create systems. So now they were thinking differently than just a business owner.
Yeah.
But there's another realm down here called the investor. They become a business owner to become an investor. And this is where the person pays no more taxes because now they're helping the community, they're helping the county to generate income with the business owner, actually, because that employee is now paying the taxes.
Mm,
He's paying Social Security with the FICA. So, yeah, we want to give you more opportunity to build more businesses and buy more houses so that we can, make sure that the banks are not paying the loans on those houses, and it's in the care of an investor. That's why BlackRock is buying up all this stuff because
everything.
they know that the real estate is the next boom of the country because some people are going to need those homes because they're going to be tired of renting, or they're going to catch on and recognize the house that person owns has no limitation of how many people can be in it, but the
Mm-hmm.
apartments do. And when money starts getting tight and they can't live in that apartment, they're going to find somebody with a house that can be moved into, and not have that fear of being kicked out in the street because someone in the family housed them.
Mm,
And that's again going back to the family. We got to get united as a family to work together because we're gonna have to be our own parachutes
yeah.
in these upcoming
Yeah.
years, especially starting this year, if you know what's going on. But
Okay.
again, we have to get to the point where we have a mind shift. As entrepreneurs, you have to think, get out of operations as fast. The faster you do that, the faster you will see the wealth grow, and the tax will change. But don't just stop there. And this is the next part of mindset shift. Put that LLC under a trust. Get a business trust to where the trust owns the business.
Mm,
I'm going to go to Nike. Nike's trust owns Nike, right?
okay.
All you see
Mm-hmm.
is Nike, though. But the trust is based out of an island that pays 1% tax. So Nike's paying 1% tax to its parent company.
Mm,
And that's the beauty.
gotcha. Gotcha. I see. I see. So that's how they really expand on their wealth.
They know how to
The
build a
company and then get a
system.
trust. And yeah.
Mhm.
Okay.
And that trust is not known. No one knows what the name of that trust is.
Mm-hmm. Mm-hmm.
That's where the protection comes in. Because if someone wants to sue Nike, they're going to be suing an entity that might not have what they think is there, because the wealth and the assets are under the trust, not that brand.
Mm, mm. Okay.
That's the power of leveraging a trust versus an LLC, and causing all the assets to be protected in the trust, not the LLC. The LLC is just a holding company for assets, right? So
Right.
yes, that's why you can put a house in an LLC. That's what all
Hmm.
investors put houses in LLCs, and that causes that system of utility bills and the landscaping man to cause that house to kind of function, right? So that house is an asset, but it's owned by the trust, so that the trust takes all the liability, hits
Oh,
protection away. And so that's what the wealthy has been doing for years. And haven't told us that because they want you to read that in a book and they don't think you're going to read.
mm,
So
mm-hmm,
read.
mm-hmm. Gotcha.
One
Okay.
book I'll also highlight that changed my life is Rich Dad Poor Dad by Robert Kiyosaki.
Yeah, I got that right under my desk. That was one of the books that too change your mindset. It's all I'm with you with the mindset. It's all about mindset. Everything is all about mindset. Everything. 100% mindset. It's just I definitely wanted to ask you again about that wealth thing because it's like sometimes you can go through this and have this aha moment, but you so caught in the matrix of you need this for this. You need this to take care of your family. Yes, you just had the aha, but how do you escape? And sometimes people be on that hamster wheel. You can know all the information you want, but if you don't have the ability or know how to put it into practice,
Mm-hmm.
you're going to be stuck. Again, that's why I kind of asked you that. And
Good.
one of the things I kind of want to go back to this. I know, like I said, we was getting deep. But I want to go back to this. One thing is, you can start a business or something like that, and I know you do a lot, but specifically life insurance. I know life insurance can be a good way for anybody that's thinking about being an entrepreneur to really get started too. And if anybody looking at this or is listening to be a life insurance agent, is not hard, but you have to have the right mentorship. People like my man Raymond here and the right team. We are on the same team, so we always can use each other. So if anybody's watching this, you're thinking about something, you could be an entrepreneur, look at the link down below and we can set you up as a life insurance agent or start you on your journey to becoming one, and it could be profitable. And this is why I want to segue into my man Raymond, because he is a profitable, very profitable agent.
Thank
And
you.
I would like you to, if you can share, like what your numbers maybe look like last year as a life insurance agent. I know you said you were profitable. I don't know if you
Yeah,
want to share.
I was profitable to an extent.
Okay.
I was profitable because I was building my financial solution company with the life insurance leg, and that's what caused me to kind of shift the direction of my company.
Mm-hmm.
I got my license back in 2021,
Okay.
and from then on, I've gained more wisdom and understanding because I'm with the right team. That team
That's
piece
key.
key. And that team has led me to have not just higher income, but I have a mentor that deals with millions. And so, uh, if that person's dealing with millions, I can learn how to deal with millions as well for my people. And so, ultimately, I got a wealth of wisdom that I can. It's not. It's invaluable. It's caused
From
my
your
business to
network.
grow because of my leadership. Yep,
I got you.
the
And
network,
your yeah.
and
So I
and
like
tied
that.
into the systems that the leadership gave. Every Wednesday from 9 to 12 midnight, they're in California. We're on the Zoom as a team, and we're
Mm,
learning. We're gathering data that changes our mindset. And again, they're not just African Americans; they're another ethnicity. They're
mm-hmm,
mostly from Vietnam, and they've generated wealth with their culture. And we're learning as African Americans to think more so like them, like my neighbor. My neighbor
mm-hmm.
has a child that's 18 with an 850 credit score, graduated college, and just bought her house at
Mm,
19
mm,
because Her mother, who was Caucasian, her father was Arab, and she was able to take advantage of what the family was sharing, information sharing, and take a boost in life at 19, graduated college, making an income as an employee. But she literally, what other 18-year-olds know that you know that graduated college?
Not many.
Information. So, but that's her family, her culture of her family brought her into that next level of thinking. So that's her foundation. She learned from home. She wasn't in the public schools. She was homeschooled. That's how she was able to get that early degree.
Mm, mm,
So how you learn matters, and who you're learning from matters. I've learned
yeah.
from Robert Kiyosaki. I've learned from Zig Ziglar. I've learned from Jim Rohn. I've learned from
Yeah.
Mike Murdoch. I've learned from Mike Freeman. I've learned from a lot of people that literally gave me stepping stones to and shortcuts to wealth. And I think
Hmm.
that's one of the I keep mentioning books because I've learned and they wrote that down so that I can learn from them and beat the system to kind of get higher at a young age. So my first house was at 20 because I read Rich Dad Poor Dad. I said, "Oh,
Mm-hmm.
I can buy a house at 20 because I have a
Yeah.
good credit score." Okay, well, let me get out this apartment that I was living in with a friend and let me own my own.
Hmm.
But I didn't highlight this earlier, and I stopped on the IULs. There's another life insurance policy that we use as a whole life to pay off debt,
Hmm.
and that one is the third one that I use as my formula to cover all issues. That's the mortgage payoff plan.
Hmm.
That's the school loan plan. That's the plan to pay off my cars and all of my debts with
Hmm.
life insurance. Because remember that bucket that's growing as a cash value,
Yeah.
I'm able to use that to pay off debt in this one specific policy, causing the past decisions to be cleaned up. The IUL is causing my current situations, my living benefits to take place. Like if a car was to have an accident, that car would go to uh, uh, the body shop to get fixed with the help of the car insurance. All right. But the IUL is giving me the capability of going to the hospital and having the hospital bills paid off because of my IUL, so that my life expectancy can be longer and preserved. That's the whole purpose of the IUL. And then I got the term that I can convert into an IUL in time. And yeah, if something was happening to me, yeah, the house will be paid off. That's the asset payoff plan as well. But I want to convert that term into an IUL so that I can have the high death benefit preserved without taking another test.
Mm.
That's the other key. Because in the beginning of that term, I had to take a physical exam
Yeah.
and then qualify for that term. But at the end of that term, that's when you have to take another test. But my health might not be the same
Hmm.
when I first got it, right? So I got to
Right.
think about, okay, I want to beat that time because that whole death benefit goes to zero if you don't continue that term and you don't qualify for it. It goes away. So if I keep that death benefit, convert that into an IUL, by maybe paying a little bit more, but that's why I'm giving it 10, at least 10, most 10 years to convert it into the IOL because it can have a higher premium payment. So that's the way we strategize that. And if I have all of my clients making that happen, oh, don't forget the annuity. The
Hmm.
annuity is the thing that causes those 401ks to never go down again.
Yeah. Yeah. Down the
So that's
road.
that's the fourth element that I would always highlight, so that I'm taking care of the person's debt, I'm taking care of the person's living benefits in life, retirement, and I'm also taking care of their future wealth during retirement using the annuity as well, because I can also cause that annuity to transfer those 401ks of the past that I had and never lose ever again. But then also, again, have another death benefit. And again, all this is going under the trust, like the Rockefellers, so that that death benefit that bank sees as a collateral, if you want to take a loan from the bank, you can, because the trust has those life insurance policies that they're looking at, like, oh, well, they do have this to kind of support them over these courses of years. And so, cool, we give you it's more trustable to give you a loan with those life insurance policies, and all those assets.
Okay.
And that's how the Rockefellers generated their wealth over centuries now, because they use that trust with all the assets, people dying, and now they don't think about money as we do. They don't
Yeah.
budget the same way we might budget. They think about, okay, well, I want it. All right, well, push the button.
Got it. Yeah. So you definitely encourage people to invest like the Rockefellers.
I
That
do.
is that's priceless because again, you talking about big name families and you dropping a lot of knowledge right here.
Oh,
So again, I can tell that you are very knowledgeable. Hopefully, I'm pretty sure our viewers going to tell that too. So if someone wanted to work with you to, enhance their finances through life insurance or come up with some strategies to build that wealth, how can they get in contact with you?
well, thank you for asking. I would first say to connect with Raymond Lives. I have this YouTube channel that I'm starting this year to generate these kind of conversations, but also
Yeah.
highlight other things to living, because I want people to live. And so Raymond Lives is going to be the platform that I coach, I speak. I'm writing a book.
Mm,
Will go out this year as well, and or that's a platform that I'm using for coaching and all that. Then there's
okay.
also that wealth generating platform called One Accord Financial Solutions that I'm able to use the muscles and flex a little bit using my team again to
Mm-hmm.
help people to get their credit repair or credit correction. Correct me when I'm wrong. Yeah, correct credit correction, because I gotta not say credit repair. Credit corrections. I have to have that debt elimination team to take care of the debt. That's the preparation team. Then I have lenders and realtors help people to get into homes, and then also I have the property management team to help people to manage their investments after they've gotten their homes and they've gone on to get other rentals. And then I have the protection team. That's the life insurance as well as the
Mm-hmm.
estate planning team to make sure that we protect their assets after they've gotten them. And as a team, One Accord Financial Solutions is there to make that solution element take place. That the coaching is kind of leading you toward. You know what I mean?
Okay, okay. Yeah, and you guys can check all of that out. I'm going to make sure it's in the description of this video and definitely be on the lookout for his YouTube channel. Like I said, Raymond Lives, and I'm definitely going to be assisting him with that. I got to help you out with that.
Thank you, sir.
And
Thank you,
you
sir.
guys can help out by going over there, subscribing to his channel. He doesn't have anything out yet, but I'm sure everything he's going to put up there is going to be awesome, educational. Because at the end of the day, we need to have these talks. We
Yes.
need to have these conversations about money. We need to have these conversations about just things that can open our eyes. Maybe we can even spark someone to have that aha moment. That's priceless.
Priceless.
In episodes like this, sessions like this, just going through the motions, this really helps. Because again, social media is big and everyone's up there, so you should at least be able to learn something valuable from social media.
Correct.
Um, okay, you talked about the YouTube channel is coming up.
Yes.
Anything else
Raymond
coming
lives
up?
on court. Say again.
Is anything else coming up in the future for you?
Yes, I am actually tomorrow. I mean, I know this is live, it will be in replay
Mm-hmm.
later on, but I'm having a don't just dream it, but live it vision board party taking place
Mm-hmm.
on tomorrow in the office at 1 o'clock. So the date is January the 11th at 1 o'clock.
Mm-hmm.
I like the ones. You see that?
Okay.
So Raymond Lives is having a vision board party so that we can begin to get these visions as on the inside of us as entrepreneurs, as parents, as living individuals that were birthed with something other than themselves or maybe bigger than themselves, given that vision and opportunity to be placed on a board that they can see throughout the year and motivate their faith, grow that vision internally to where they can see it more on a regular basis. And so that's coming up tomorrow.
Yeah.
Every month in the office, I'm also having cash flow game nights, so that way I'm able to pour out to those that don't know about home ownership and don't see how they can, get out of the rat race, but
Right.
open their minds to recognize your budget that you get every single, you use every single month can help you to get out the rat race with just the information that you have. And so you have to get to the point where you're financially literate to take advantage of certain systems. So the cash flow is help again to increase people's mindsets, and I have that every last Friday of the month in the office. So those are the two major events. I'm also writing this book. I don't know if I should
Okay.
name the book, but the book will highlight health and wellness as a major element that you have to consider. Your obviously your financial wealth, but also your spirit man. And so that combined will help you to kind of get a little preview of what the book is going to be about. And so,
Okay.
all that is going to be, things I'm putting out this year. Again, I can't talk about everything because
Yeah, yeah.
uh,
We're gonna be watching. We're gonna be watching.
I want to be surprised to my followers and those that desire to stay connected. But thank you for the opportunity that this started right here. This is the first opportunity that was able to be public this year, so I appreciate that. And it's on a day that is very meaningful to me. So I appreciate that, man.
Oh, meaningful today.
Yes, sir.
What's special about today? I get.
I know. I did say it. I did say it.
You said it. I had to ask.
I literally had an official divorce occur
Oh. Oh. Okay. 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 My bad. I didn't mean to
this
open
day
that up.
years before.
Got.
So it's an interesting day.
Okay. Okay. All right. I appreciate you being up here. And again, maybe we'll do more. Have you up here? Because again, you have a wealth of
I
knowledge.
look
You
forward
have
to
a
it,
wealth
man.
of knowledge. I can sit here and we could keep going for real.
Yeah.
But again, I don't want to make the video too long. But we could keep going for hours because you definitely have a wealth of knowledge. It shows.
Thank you.
And again, if anyone wants to contact Mr. Raymond Lives.
No, Liz is right. You said it right.
I'm gonna shoot my.
It's
I'm,
okay.
I'm gonna have to edit that out.
It's okay.
But anyway, if you ever want to get in contact with him, definitely make sure you check in the description of this video. Again, we're live right now, but I go back and I edit the video, and all of that information is going to be there, so you can really get in contact with him because this is a guy that you definitely want on your team. He
Thank
has a wealth of knowledge,
you.
and shoot, I would hire him, right? Because he definitely has insights on everything that you could possibly need, from investing to retirement, of course, life insurance. But definitely make sure you check him out.
Thank you, sir.
And if you guys are interested in anything we talked about, again, in the description, check it out. Anything, any part in, oh, no. Before we go, I got to ask you, and I think I just might start a thing. So I asked Markel, and I said mine, but two goals for 2022. I mean 2025. Do you have two goals for 2025?
Well,
What two goals?
I already talked about my book. I want to release my first book, and that be around my birthday in April.
In
But
April. Okay.
in April, yeah.
Okay.
That's one goal, and another goal I can share it. It's very important to me. Is I have to find my helpmate, and so that's my top. One of my top prayers is to find my partner, because that's one of the most important decisions in life. Your partner
Facts.
that you consider your husband or your wife. That's the most important decision as an adult.
Okay.
And so it's time to buckle down and find her. I've been searching, but I have an interesting sense that she's close now, and so
You can feel it.
in the ring this year.
Okay.
Yeah.
Okay. All right. So we're gonna have to come back. We definitely gonna have to get you back next year. Ask you the question: did it work? Did you find her? Was she close? I would like to know that myself. But yeah, there are great goals, great goals. And again, this video can help you, like it's gonna, like mine help me stay accountable and remember what exactly it is that you said you were going to do and how did it turn out at the end of the year. That's why I kind of like putting it on camera because you can remember. All right. So again, thank you for coming on to the show. And again, I hope to have you plenty more times because I really could just listen to you with your knowledge all night for real. But again, we don't want to sit here all night, right? Um,
I mean, I can too, but I know you have limitations on this
yeah,
platform.
yeah, yeah, yeah. I mean, people might ask for more. Who knows? But again, I appreciate you coming up here. I
Man,
appreciate you
thank
coming
you.
up here.
But I want to leave with this thought that life
Okay.
is choice driven, and you live and die by the choices you make.
Mm,
Life is choice driven, and you live and die by the choices you make. So that's a reminder to recognize that, you know, your decisions are limited by based on what you're exposed to. And so get some books in your hand or play the audio, but getting more knowledge because that gives you more opportunity to make different decisions.
hmm.
And I want to leave people with that.
I like that. I like that. That is you about to make me talk some more because I can keep going. I like that because one of the things I do in my car, I don't listen to radio. If I'm riding by myself, you'll never hear me listening to the radio. What I am listening to is some type of information. Again, it could be me listening to a webinar because again, I'm told you I'm trying to become a accredited financial counselor. So I'm listening to webinars. How again, one of the secrets of how I passed the life insurance exam so fast, I'm listening to it all day
Hmm.
all day. The fact that we have all these earbuds and you could be learning instead of just, listening to music. I'm not going to say it doesn't serve you because it does change your mood. Music can affect your mood if you need it, but you really could be learning while you're driving, while you're sitting at your desk. I do it all the time. I
It's
do it
very
all the time.
universal. You're right. If you can think about how many hours are you in that car every week, if you count your hours in the car, I use the time in my car to make phone calls and learn as well, as you said. So I do have
Yeah.
audio tapes. Actually, my car actually has a CD player, so I I do have books on CD. But
Okay.
I'm using that technology to build my mindset and change my mindset, and it's
Yeah.
necessary. I grew up on tapes of Zig Ziglar and Mike Murdoch
Mm,
in my car.
mm,
I was driving a little Honda Civic, but
mm-hmm,
I was learning, and that's what helped me to get into my first house. That knowledge.
mm-hmm.
Yep.
Yeah, so I definitely agree with that 100%. And those are great words to leave off with. Great words.
Yep.
So, like I said, we appreciate you guys checking us out. And please like, share, comment, and again, check out Mr. Raymond Lives if you want any type of service he offers. Because again, he's a expert,
Thank you.
and you can tell. You can tell.
Thank you, man.
All right. Again, thanks for checking us out.
Yes,
Peace
sir.
out. I'm ended. Let me record.
That was beautiful. Good job.
Yeah. One day I'm gonna get as knowledgeable as